This is the Inside Track, everybody. Back in February, he said Japan faced the biggest risk of crisis in the G10. I am, of course, talking about Goldman Sachs' Jim O'Neill, the man who coined the now ubiquitous term BRIC. Well, Japan is coming to terms with some of those risks, pledging to keep interest rates at zero and joining the quantitative easing parade with some bond buying of its own. Jim O'Neill is back with us this morning, sporting a fancy new title. Jim is now chairman of Goldman Sachs Asset Management. He is on the phone. Jim, there's a sense of desperation out there. You've got the Brazilians taking action on hot money inflows. You've got Jean-Claude Trichet calling on Premier Wen of China. And now, of course, you have these big overnight moves from the Bank of Japan. Let's start with Japan. Is this really going to be enough? Can anything bring the Japanese economy back to life, inject a spark of inflation into the economy over there?
Good question. I think, Japan within the G10 countries, as you made reference to in the intro, has arguably got the biggest structural challenges of them all. So they have to do as many things as they can to stop the negative cyclical momentum of the crisis. And in addition, particularly unique to them, the deflationary consequences of an excessively strong yen. So I admire aspects of what they did this morning, but, it often seems to come from the BOJ with a sort of grudging step. You sometimes think that they could do with a dose of Ben Bernanke over there and kind of get ahead of the game rather than just responding to the latest difficult issue. But it's certainly what they've done this morning is something that should be happening. They probably should have done it earlier, and I think they should do more to stop the yen strength. And contrary to many others, I think, in my own judgment, the case for intervention to weaken the yen is actually quite strong.
Well, right now, as you probably know, the yen is trading at 83.42 to the dollar. It's really just a half a yen off that record high set before the Bank of Japan last acknowledged its intervention. You think there's a strong case for more. Will we get it?
I'm pretty sure at some stage we will. I've just put something out this morning, actually, to put aspects of this in a global context ahead of the IMF annual meetings. International monetary diplomacy is coming into its high point of the year. And, the finance ministry in Japan is always so aware of these subtleties that I think high-profile intervention in the next couple of days would seem to be a bit out of order. But I think if the yen were to strengthen beyond 82, for example, even if it were in the next couple of days, I think they probably would intervene.
Jim, speaking of international monetary diplomacy, it's a term that you just uttered in the context of the IMF. Does this move by the BOJ joining the QE parade, is that going to set off the next round of quantitative easing by, say, the Fed? Lots of expectations for that. Bank of England, the ECB. Is this a global push in the developed world towards QE?
Well, I would look at Japan's move as unique to Japan. However, it is in the circumstances of an excessively strong yen, and the reason why the yen is so strong is partly because the Fed is being so aggressive, and from what I can see, making it pretty clear that come the next FOMC meeting, they will be doing some more QE as well, probably. So you could link it all together globally. In the UK and on the continent, I see that less likely in the near future because I don't think the economic need in either place is currently so obvious. Let me add very quickly, because you said all the developed world, there are some parts of the developed world that are doing extremely well.
Jim, I want to try and bring in some BRIC context, if you will, some emerging markets context, because as Brazil is finding out, what's bad, or at least what's perceived to be bad for the developed world, isn't necessarily good for the emerging markets. Where does the so-called currency war go next?
The currency world?
Currency war. How does it play out?
Oh, sorry, the currency war. Interesting question. I think we're going to see some interesting focus on that with the IMF meetings coming up this week. I think on one level, the whole use of the phrase currency war is being a little bit exaggerated. some countries have clearly got currencies that are too strong, and some kind of interventional activity to stop it, I think, is justified. I would include, even though the circumstances are very different, both Brazil, Japan, and maybe even Switzerland in that category.
What about the U.S., Jim?
The U.S. is an interesting, more subtle one where, the U.S. seems to opine that it's inappropriate that so many people intervene, but of course, the dollar's so weak because of the aggressiveness of the Fed, therein lies some of the dilemma, and it's why the issue of well thought out capital controls may be an option that some countries need to consider more, which the Brazilians have done overnight.
Jim, what do you mean when you say the dollar is so weak? The DXY, the dollar index, is at 78 right now. Where should it be?
Well, it should be where it's going to go. And if the Fed's going to stick with the strategy it looks like it's adopting, the dollar's going to be under pressure further against many currencies all over the world. I would argue, in the context of global rebalancing and this goal of Obama to double exports in the next 5 years, not a bad strategy, seen from a U.S. perspective. But of course, it puts challenges on other countries.
Jim, speaking of strategy from the U.S. perspective, we read an op-ed in the FT written by George Soros saying that America needs more stimulus and the only reason it's not happening is because of politics. What do you make of that call?
Well, I guess George might know more about the politics than I do, or I probably certainly think he would do. But, I have two slight nuances with that. I certainly think there is dangers of tightening fiscal policy too much, as has become populist view here in Europe. So in that sense, I sympathize. However, and here's the two nuances. The part of the dilemma is the last stimulus, which was so large, appears to have achieved so little. I don't know how much freedom the U.S. has really got to just keep dreaming up more fiscal stimulus. Secondly, in that regard, I think it has to be, if it's thought through really carefully, and to one area that George did mention I'm a strong supporter of, more stimulus on very targeted infrastructure.
Infrastructure and education are his two key areas.
Well, education, everybody needs more spending on education. I don't think that is so obvious. I think spending on infrastructure, somebody that travels in and out of New York all the while, and you still to this day can't get fast direct transport from the airport into Manhattan, there's a pretty obvious candidate.
Jim, we only have about 20 seconds left, but I have to ask you a quick question. Do you agree fundamentally with the premise of Soros's argument that demand is the problem?
Demand is the problem in the U.S., yes. The U.S. is trying to boost its savings rate overnight to where it should be in 5 years.